Hello everyone, I am Michael Mruger and I'm here with Dave Wojcicki today. Today we're going to be going over the details about filing a tax return extension. Now most individual filers realize the April 15 tax filing deadline, but you have the option to file an extension which then extends that out to potentially October 15th. But we want to go through, why people file an extension, if you have taxes due, when does that file an extension for the taxes that are due, what do you do for your estimated tax payments, and one of the most common questions we get is that going to increase your chances of getting audited by the IRS? But at the most basic level, you file these extensions for clients all the time. What are the most common reasons why people file an extension of their tax return?
Well, I'm a big believer in the extension process just because I think it gives you, Americans by nature are procrastinators. So most people don't gather their information and don't spend the time that they probably should gathering the information they do to file a return on time. And there's just a misconception about, everything has to be due by March 15th for corporate or April 15th for individuals. And there's a penalty if I file an extension, and that's not necessarily true. So I think just from a process standpoint, I always feel that the taxpayer does a better job getting documents. It gives them additional options to figure out what they want to do if it gives them more time to file. And the IRS 100% allows you to do that process. And then from a preparer as a professional standpoint, it gives them more time to actually spend some time with the client, figuring out what they want to do for that year and then going forward. And I always say, look, if you hired a painter and said, I'll give you, 2 weeks to paint this living room, or I'll give you as much time as you want to paint the living room, likely the living room is going to look better by that painter. And that's kind of the way I look at it from a professional standpoint. And the client standpoint, they will do a better job thinking about what they might be able to put together. And the professional is also going to be able to spend a little more time than that concentrated area by April 15th.
When you file an extension, do you have to give the IRS a reason saying, hey, I'm filing an extension because of XYZ, or is everyone just allowed to file an extension?
It's an automatic extension process. So basically the IRS says, hey, if you want to file an extension, you just have to notify us that you're filing an extension, and there are rules about paying in. It's a pet peeve of mine because I don't understand the process of filing a piece of paper that's automatic anyway, and telling the IRS, hey, I'm going to extend the tax return, when there's penalties and interest if you don't pay the right amount of money anyway. Why do we need to go through that process of notifying them? There's a requirement to file your taxes, and you're already going to have to pay, and they're already penalizing you if you don't pay the right amount. So the rigmarole around the extension process, I'd love to fight to get that removed because it makes no sense to me. It's just unnecessary paperwork, but there's a piece of paper you have to file or electronically file that gives you an automatic extension of 6 months.
Now, I've used an accountant and they'll file potentially probably electronically for you the extension.
Correct.
Is there something that they can just do automatically, or is it something the taxpayer ends up having to sign to say, okay, you do an extension on my behalf? How does it work?
No, we can extend the return on their behalf without their signature. If they're making a payment, obviously they need to sign authorization for a payment to be made. And I would say, most of the time people that extend generally owe money, but not always.
Now, speaking of owing money, when we do these tax return extensions, the big thing is it's an extension on actually filing the return. But if you have a tax liability, if you owe money, it doesn't extend the amount of time that you have to pay those taxes, correct?
Yeah, the IRS just wants their money by April 15th, right? Which makes sense. You have a taxpayer. If the money wasn't required to be done by April 15th, everybody would extend, right? You would just not pay them any money, wait till October 15th and pay it all. So the IRS is basically saying, look, we'll give you more time to gather the information, but you have to make a good faith estimate as to what you're going to owe us and have to pay that amount in. And if you're underpaid within a certain range, then that's okay, but we're going to charge you interest just like if you were late paying on a loan or anything else. There is that piece to it.
So how does the interest work? So let's say if for some reason I filed the extension, I had taxes due, but I didn't remit the amount by April 15th. How does it work for interest and penalties if, let's say I don't remit that tax liability until September?
Well, if you're in a reasonable amount, which is if you're within 90% of your current year amount. So let's say you had a $10,000 taxes, that your total tax amount was $10,000, you had paid in $9,000, you're within 10%, and you didn't pay that extra $1,000 until 3 months from now, there would be interest charged on the $3,000. So it's at whatever the interest rate is. This year, right now it's 7%. Last year would have been 3%. So there's a difference just because the interest rates obviously have gone up.
So even though you're doing an extension, you will still probably have to run an estimate before April 15th. You'll have to do some work to make sure there's not a big liability waiting for you with these interest and penalties. So even though you're going to extension, it's not like, hey, I get to punt on everything. It's I'm probably going to do a calculation before then, right?
I think for most people relatively easy because hey, last year I had a total tax of $20,000 and I got a raise. I made a little bit more income. I think my income's up $5,000 more. They're at my tax rate of 20%, then I should have another $1,000. I need to have $20,000 plus $1,000, $21,000 paid in this year. And you look at what you have withheld and you make a payment. And so it's not a complicated process, but it saves you all that other paperwork of gathering information and getting your numbers exact.
Now, how does it work for the the estimated tax payment? So let's say we're talking about 2022. We're now in the spring of 2023 talking about filing an extension. I've got my first estimated tax payment due for 2023, April 15th, but I have yet to complete my taxes for 2022. How does that work with that? Okay, one thing's the tax liability from the previous year. The next thing is, what do I start making for my estimated payments in the current year if the tax file hasn't, or the tax return hasn't been completed yet?
Well, it's a little trickier, but it's not too bad. I mean, really, there's a couple things you got to look at. You can always look back to what your prior year tax return was. Now, it's not done yet, but again, in order for you to make that extension payment, you need to roughly know what it was. Mm-hmm. And if you're a high income taxpayer where your adjusted gross income is over $150,000, then you need to pay 110% of what that estimated amount was. So if you thought on your extension date your total tax was $20,000, you would need to make sure you had $22,000 paid in on a quarterly basis for 2023. The trickier part becomes where your income is going to be down. You had a really high income year in 2020, 2023. You don't think you're going to make $200,000, and you think you're going to make $80,000. You need to do your best estimate of what 2023 is going to look like and pay that quarterly. And again, those quarterly payments, they're due April 15th, June 15th, September 15th, and January 15th. They're based on what you made in those quarters, in theory. So you're going to know when your April 15th payment is due how you did income-wise, if you're self-employed or if you have a business. And if your income's down for that quarter, you'll make a measurement at that quarter and make a payment based on that. And then you'll make a payment in the June quarter based on the first cumulative 5 months, and then the first cumulative 8 months, and then finally the cumulative for the year, you'll make the payment.
Gotcha.
So there's some calculations involved, but they're estimates. Again, they're estimated payments.
Now, we've been talking about tax liability. Let's say for taxpayers that are due a refund, so they're waiting for their refund. By going an extension, it's naturally going to take longer for them to get their refund because they've extended out and they're waiting to get their money back. But more on I've gotten the question of the timing. So if you request a refund by filing your taxes on time, does the IRS take longer to issue a refund if you're into those extension dates, or is it roughly the same kind of timeline from the time you file to the time that they actually send you the money for the refund?
Well, I would say it depends on how you file. I mean, I think everybody should file electronically. I mean, it's just more efficient, especially since the pandemic. The IRS is understaffed. More people are working from home. And if you're mailing your return in or you're mailing in a paper check with an extension, you're going to get a refund. That process is going to take longer. So, I think I think you should direct deposit your refund. You could probably get a turnaround in 3 weeks as opposed to the IRS getting your return, going through the process and cutting you a physical check, and then depending on the mail service to actually get it back to you. So I think you should have direct deposit. I think you should electronically file your return, electronically file your extension, and even electronically make your payments. So there's a direct pay option in the IRS. It's a very easy debit option that doesn't require you to write a check and hope that they process the check correctly and apply it to your account. So I think electronically makes it, if you file in April, it should take a few weeks turnaround. And if you file in September, it should take a few weeks turnaround on a refund.
So the big question we always get on this extension thing from clients is, if I do this extension, is it going to raise a red flag with the IRS, and am I more likely to get audited because they think I need more time because something's going on with my taxes? So
yeah, there's no statistics on that in it. It doesn't make sense in theory because when you file a tax return, for let's say the 2022 tax year, they're now looking at auditing 2022 tax returns in 2023 when they're being filed. They're looking at 2020 tax returns, usually 2 or 3 years behind. And there's always the automatic computer checking on, hey, did you have a document that you didn't report? And the IRS will pick up on that. But as far as true audits, they're after the fact. There's no truth to that. And I also hear the other side where people say, if you file late, you're not in the pool as early. So therefore, you're less likely to be selected. I don't think there's truth on either side.
Plus, at the extension, a lot of times people are doing extensions to make sure it's right the first time, right?
Yeah.
So if you file something wrong and then have to go back and start doing all these amendments and stuff, that could look a little bit hokier.
Yeah, I think the bigger thing on filing extension now is, the IRS forms have gotten more complicated. The regulations have gotten more complicated. And for businesses and brokerage firms, they become more complicated. So we used to get the 1099s January 31st, right? All the 1099s brokerages were due by then. Now they're due technically February 28th. But most of them get extensions past February 28th.
Right.
So you're often getting your 1099s till, let's say, March 15th. everybody has 30 days now to complete their tax return. And that's assuming that your brokerage firm then in June doesn't say, hey, we had some changes from a mutual fund company and these long-term capital gain distributions were now short-term or became ordinary dividends, and we're going to get an amended 1099. And now you have to go back and amend your 1099. So if you are always in the process of extending your tax return, and it's a lot of people, it's mental, right? Hey, I have a thing that's due in my head April 15th. I want to make sure I get it done by April 15th. But the options you get from extending, as far as, especially if you're a business owner, what do I want to do for a SEP plan? What do I want to put in retirement plan? If I file April 15th, that decision has to be made by April 15th. If I extend, I don't have to make that decision until October 15th.
Yeah.
And if my resource, or if I have more time to get the money, accumulate the money to fund my retirement, you're in better shape. And also, anything that happens in a 6-month period, you have hindsight in your decision making. You don't have that when you file April 15th.
Yeah.
If I'm just a W-2 earner, I have W-2, few investments, and I know I'm getting a refund, by all means, file on time.
Yeah.
Because you probably should be able to gather your documents, you get an accurate return, and probably the most efficient return you can get. But if you have a little more complications and you're really rushed to get your stuff together, there's absolutely nothing wrong with filing an extension.
And that's a good point that Dave just made about those employer-sponsored retirement plans, because we'll see a lot of small business owners do this, that they'll intentionally file an extension because they have a SEP IRA, solo K, simple IRA plan, and they do that because if you file the extension, the contribution is intently due until tax filing deadline plus extension, so they have until September to come up with the funding amount for the previous year, which is sometimes a strategy, because they might say, well, I don't have the cash in March, but I will have the cash by July or August, which then allows them to make a larger pre-tax contribution for the previous year, and the extension essentially allowed that, right?
Yeah, and it also gives people some, you talk about what you do is you get some dollar cost averaging. If I had a $50,000 contribution I had to make in March 15th or April 15th, is it better to make it then, or is it better to make it $10,000 a month for the next 5 months and make sure it's done by September 15th? So I just think the options for extending, most of the time it's mental. People just don't want to extend. Yeah. But I think it's I personally, I always extend my return.
Yeah.
Probably because I procrastinate also, but I know it's going to be more accurate. And again, if something changes, you've got the ability to have some hindsight on your extension process.
Yeah. The one other thing I will say about, like, when we talk about extending for retirement contributions, the IRA deadlines are not extended. So those April 15th for making contributions to traditional IRAs, Roth IRAs, whether you do an extension or not, the contributions for those have to be in by that April 15th.
Yeah, the HSAs as well. There are some April 15th deadlines that you got to make sure. Generally, when you're doing your extension process, you look at those things. Hey, what do we have to have done by April 15th? And then we extend. And then you have all the other decisions to make by September, October. You just want to make sure you make a good faith estimate to make that 90%, because if you don't pay anything and you have interest, and then there's underpayment penalties as well. Underpayment penalty is 0.5%, so of the tax due per month. Yeah. So that adds up.
Now, is there a strategy, I may have heard this, that if you, let's say you calculate your tax, you do your tax return and you're getting April 15th, you're like, oh gosh, I don't have the money to pay the taxes. Is that actually better, instead of doing nothing, to file an extension and pay that money at, let's say, September, as opposed to doing nothing? Because aren't the penalties larger? Because now you have a failure to file and a failure. Like, how does that kind of?
Yeah, the late filing penalty is, again, you have April 15th, then you extend, and when you extend, you tell the IRS, I'm going to extend. If you don't do that and you file late, it's called late filed. Yeah. Even though you're going to beat the October 15th deadline, you didn't tell them, which is that extension process I think is crazy. Yeah. There's a 5% penalty per month for late filing. Gotcha. So if it goes to October and you're due and you don't file, if you can't make the payment, you should file. The IRS is a very punitive late filing. They want your return in so that they know what you owe. Gotcha. Like if you don't ever send them the return, their theory is we don't know how to even track you down. Therefore, we're going to make it very punitive for you not to file. I don't like the April 15th late filing penalty for missing an extension. I think that doesn't make any sense to me. But I get the October 15th one.
Gotcha. Okay. I hope this was helpful. If you have any questions, please feel free to reach out to us at moneysmartboard.com. Thank you.